Well, this is Steve Miley, the market chartist on behalf of forextraders.com, and we're now going to take a look at both the US dollar versus Japanese yen and the US dollar versus the euro. So the US dollar losing ground to most currencies in here throughout early June, continuing a negative trend that's been in place really from the middle of May, and certainly looking for that trend of US dollar weakness to continue within the G3 currency complex, G3 being the euro, the dollar and the yen. So certainly seeing this downtrend in here from, say, the middle to early May for dollar yen. The market more recently rebounding up twice here, you see, to challenge this trend line resistance that comes down from the 11th of May in here, and the market twice rejecting a push above there, failing here on Wednesday during the CPI and retail sales data from the US lower. And despite the rebound in here that we saw after the FOMC meeting, the bearish theme still very much intact, having surrendered 109.08. The bigger bearish theme really reinforced as well by the close of this bull gap all the way back from April that was closed more recently here in early June. So if we look at it on the bigger picture chart, you can see we've got this downtrend we feel intact, and certainly deeper correction risk for June, maybe towards 108.10 and even deeper targets. For dollar CAD, we've only really shifted to that intermediate term bearish outlook more recently. We had this sell-off when the Bank of Canada Deputy Governor gave some comments which were seen as slightly more hawkish in here earlier this week. The sell-off in here breaking down through this trend line that comes up in here from February of this year. So breaking down through that trend line from February this year, a good trend line in here, multiple touches on the trend line, the market breaking down through there, and also critically through this 132.19 low. That shifted the intermediate term outlook to bearish, and again, despite the rebound we saw in here through the Fed meeting, we do see bigger picture bearish pressures down to like 130 potentially, and we'll see that better on the daily chart. The market breaking the trend line, breaking 132.19 in here. This is actually not the trend line from February. This trend line coming all the way back from May of last year, May 2016. So looking for a more bearish theme in here, maybe to 130, 129.65 targets as we go into June. This has been Steve Miley, the market chartist on behalf of forextraders.com, and I wish you a great trading week.